One of the takeaways that I want to pick up on, Kevin, is something you mentioned, business spending, and you said the fiscal stimulus was still working. What is it about the policies that were unveiled more than a year ago that is still helping this economy on that front?
Two things. One, the deregulatory environment has given businesses confidence to look forward. So CapEx is a forward-looking thing. It's not trying to get your stock price up by buybacks and financial engineering techniques.
Yep.
In addition, if you look at this rally has a lot been driven by margin expansion, and margins are higher. They had a decline in 2016. So if you're running a business and you have more profitability, you can think differently about how you're going to deploy that excess capital. The forecast we've seen, about half of the capital is going to be split between giving back to shareholders this year for the S&P 500 and the other half's for investment.
Keith, it's really interesting. Looking at the data, you can find signs of weakness, but looking at these companies, they're still willing to spend. That doesn't tell me that there's a recession around the corner if these companies still have the confidence to put cash to work.
Yeah, I think it's a couple things. So one, they spent last year, you saw CapEx grow, but they grew less than cash flows. So meaning you have some pent-up cash at corporates to spend. Two, the Fed helped turn markets and confidence. We find that equities cause the ISM corporate sentiment, so meaning CEOs and CFOs pay attention to their stock prices. And three, and I think most importantly, the Fed pause was key for small firms. Why? They have a lot of floating rate debt. Every 1% increase in the Fed rate for us was a 5 to 6% hit to profits. So you put that all together, and I think it means you can have that business spending positive backdrop.
Mark?
Rates are everything. If you had to pick, if you had an investment firm and you said you could look at earnings when 150 S&P 500 companies are going to announce, or a surprise Fed announcement, there's no doubt where people are going to spend their time. It's all about rates. It's allowing us to grow. And the differential that we have versus the rest of the world is so large. I don't think rates do go higher right now.